Hey guys, this is the market update. Bitcoin is bouncing today. Why is that? And why is this chart telling us that we are in the most extreme conditions in the market? We're going to look at that in this video. Firstly, Bitcoin is bouncing today, a really strong move. Although I wouldn't get too excited, we are still firmly within the downtrend. As you can see, all of the moving averages are crossing here. We are not even up to that moving average. So we could go up to around 20,500, something like that. 21,000 even, and still be within the downtrend. But we have two bits of news here. You can see CPI. This is so important. This is like a monumental figure, not just for Bitcoin, for like the world. Currencies are collapsing, right? And so this is massive. We also have this figure right here, which is coming out on Friday. Make sure you understand this one. This is PCE. This is very, very important because this is actually what the Fed uses for their figures on inflation, and they want this to be at 2%, PCE inflation. Now it's coming out for August. We already got the CPI figure for August and it came in a little bit hotter than expected, and so we must also assume that PCE may be a little bit hotter. It does depend, but let's have a look at that. This is PCE inflation, as you can see. The last figure came in at 0.1. That was on the 26th of August. That was for July. So we're looking at hopefully something negative. If this comes in soft, really, really good news for the market short term. If you're trading short term, for sure. If this comes in a little bit soft, which we've already got the CPI figure, but PC is a little bit different in the makeup. If this does somehow come in a little bit soft, and we might be actually trying to, front run that figure right now, then it may actually start to ease markets a little bit. By the way, if you do want to trade on Bybit, link in description to a deposit bonus. If you trade Bitcoin short term in futures, then you can get up to $4,000 as a deposit bonus. They're also giving free spot trades across the entire platform right now, so a good bonus there. I'll leave that link in the description. Let's have a look at this chart though from Charlie Bellello. It shows oversold and overbought positions or positions in the market. So we are now, right now in 2022, at one of the most extremely oversold positions in all of history. As you can see, only 3% of stocks in the S&P have closed above their 50-day moving average today. That was yesterday. A reading more oversold than 99% of historical data points. So, there could be more pain to come, and it's down to inflation. It is down to the figures. Nothing will change unless two things happen. Either inflation moderates, and so the market technically bounces, or there is some unbelievable financial crisis where central banks have no other option than to step in, even with inflation very high. That would be extremely bad news. But as you can see here, from extremely oversold positions, what you usually get is a bounce. Now, there's a technical bounce that may happen in the market, which you may see with Bitcoin and in stocks as well, especially in the NASDAQ. Technicals are short term. The fundamental bounce must come through inflation. So that's the two things. Depends who you are as an investor. If you're short term, you might want to play a short term bounce here. If you're a long term investor, then really you're looking at those figures to come down in terms of holding over the next few years, because without inflation coming down, it's just going to remain a really restrictive place to actually invest. We also need to look at interest rates because Bitcoin is one of the most forward-looking and reactive assets. That's why we like it. It's volatile and you can actually trade this thing. This is interest rates, the 2-year government yield. Remember, the Fed has said their terminal rate, the rate that they want to get to, they think is normal, is around 4.4 to 4.6. And that's depending on data. As you can see, this blue line is 4.5. We are there now in the 2-year. Given that the data comes in normal or reducing, then that is the top for 2-year rates. That is, and I will call that. If inflation starts to come down as they think, this is the top for 2-year rates. And so that is why you may see some traders trying to front run potential flips in the market. However, if inflation does not moderate, this is not the top. The Fed have said this. So this can change, but for right now, most of this is priced in. That's all I'm saying here. So you can take that for what it is in terms of how you are as a trader and how long you want to trade these things. This is also a parabolic chart. When Bitcoin was doing this, everyone and his mother came out and said, this is a parabolic chart that is going to collapse. Well, this is the dollar index. This is not a healthy chart for the dollar. This shows that the world is in a really bad state and something has to change. Now, this is obviously going to flip as well at some point, cooling the bottom. We don't know where that is because we have to wait for the data, but at some point these things will moderate and we are on the data for that. So as I said, Friday for PCE, and then in a few weeks' time on the 13th, I believe, of October, you get that CPI figure. If these come in moderating a little bit down, there may be some relief in the markets, but until that, you have to remain bearish. And for right now, even with today's bounce at 20,000, we are still firmly within this downtrend, given what we know for right now. I also want to show this bit of on-chain data as well. And again, it's telling you that you are in the position right here where bottoms occur. And I don't want to call a bottom, because if inflation doesn't moderate, it will not be the bottom. That is for sure. There's going to be a huge dump. And of course, with a recession and the correlation that Bitcoin has to stocks right now, with a recession, you get earnings downgrades. The stocks in the S&P 500 and the NASDAQ could fall further, and any correlation that Bitcoin has to them could pull it further down. So there's many things here and correlations that we have to look at. But for on-chain data, again, what it's showing is we are in that zone. As you can see here, this is the on-chain cost basis, and previously it has always shown more or less kind of bear market bottoms down in 2015, 2019, as you can see here, even in 2012, those kind of bear market bottoms where the cost basis comes right down. Historically, this has been the look of a Bitcoin bottom, with both short-term and long-term holders now being underwater on average. The attention now is turned towards the denominator, that's US dollars. More USD strength here could place further pressure on the market short-term, absolutely. So if inflation remains high, that means the Fed gets even more hawkish, the dollar strengthens further. That makes other currencies even weaker, some potential financial crisis worries. So there's a lot going on here, and everything rides on inflation softening, coming down, and the heat being taken out of the market. So these are bottom indicators, but for sure not a bottom, for sure not a bottom until you get that inflation data that proves it and it's coming down. So data dependent, but these are really good data points to look at. Bitcoin is trying to rally today, potentially in front of the PCE figure, but it is reliant on these. Very difficult short-term trading environment, but volatility is there for sure. If you want to trade on Bybit, I'll leave that link in the description. You can get up to $4,000 as a deposit bonus in your futures trading account. If you don't trade futures, they're giving free spot trades right now as well, so that's pretty good. Link in the description for that. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.